In January of this year, gold hit an all-time high of over $5,500 an ounce. A few months later, it had dropped more than $1,000 before climbing back again. If you bought gold expecting a boring, sleepy, safe investment, 2026 had other plans. So here's the real question. With inflation still elevated, the Fed on edge, and the stock market bouncing around on every headline, is gold actually the safe haven everyone says it is? Or is it just as risky as everything else right now? By the end of this video, you'll know exactly where gold fits in your money and where it doesn't. Why everyone's suddenly talking about gold. Gold isn't usually a topic that trends. It's the boring uncle of the investing world. Slow, steady, unglamorous. But over the past year, gold has quietly delivered one of its best runs in decades, at one point returning more than 60% in a single year. That's not boring uncle behavior. That's headline behavior. And it's happening at the exact moment regular Americans are nervous about their grocery bills, their mortgage, their job security. So today we're breaking down why gold is moving the way it is, what's actually driving it, and whether you should own any. What safe haven actually means. Before we talk numbers, let's define the term everyone throws around. Safe haven. It doesn't mean gold never drops in value. It clearly does, sometimes sharply. What it means is that gold tends to hold or gain value when trust in other things, currencies, governments, the banking system, gets shaky. That's why gold tends to rise during exactly the kind of environment we're in right now. Sticky inflation, geopolitical tension, and uncertainty about what central banks will do next. It's not that gold is magic. It's that gold doesn't depend on a company's earnings report or a government's promise to pay you back. You can't print more of it. That scarcity is the entire pitch. What's actually driving gold right now? Here's what's actually pushing gold right now. And it's not just the vibes. First, central banks. For 3 years running, central banks around the world have bought over 1,000 tons of gold annually, and they're on pace to keep buying heavily this year. That's not retail investors panic buying. That's national governments quietly stacking gold as a hedge against their own currencies. Second, inflation that refuses to fully cool off. When your dollars buy less every year, gold becomes the classic hedge, an asset that historically holds its purchasing power over time, even when the dollar doesn't. Third, plain uncertainty. Trade tensions, conflicting signals from the Fed about whether rates go up or down next, and a stock market that's had a genuinely wild year. All of that pushes money towards something that doesn't answer to any single company or country. The part nobody mentions. Gold is volatile too. Now here's the part most buy gold content conveniently skips. Gold hit its all-time high of around $5,500 an ounce in late January. Within a few months, it had fallen back by well over $1,000, a drop of nearly 20%. That's not what most people picture when they hear safe. Gold can be genuinely volatile in the short term, even while being a long-term store of value. If you bought at the peak expecting a smooth ride, you had a rough few months. This is the tension every gold investor needs to sit with. Gold protects you from certain risks, currency devaluation, systemic shocks, but it does not protect you from short-term price swings. Anyone who tells you gold only goes up is selling you something. Gold versus the other safe havens. You'll often hear gold compared to Bitcoin as the other safe haven. Here's the honest scorecard for the past year. Gold has broadly outperformed, delivering a strong positive return even after its pullback from record highs, while Bitcoin has struggled to hold its own gains over the same stretch. That doesn't mean gold beats Bitcoin forever. These assets behave differently depending on the environment. But it does mean the safe haven label isn't automatic. Gold earned that reputation over literally thousands of years of being scarce, physical, and impossible to inflate away. Newer assets are still proving whether they deserve the same trust. How people actually own gold, without burying coins in the backyard. If you're considering gold, you've got a few real options, and they are not all the same investment. Physical gold, coins or bars, means you actually hold the asset. No counterparty risk, but you deal with storage, insurance, and it's less liquid when you want to sell fast. Gold ETFs are the most popular route for everyday investors. They track the price of gold and trade just like a stock, so you get exposure without a safe in your closet. This is where the bulk of new money has been flowing, with global gold ETFs pulling in record inflows earlier this year. Mining stocks are the riskiest of the three. You're not just betting on the price of gold, you're betting on a specific company's ability to actually get it out of the ground profitably. Higher potential upside, but company-specific risk stacked on top of gold's own volatility. Should you actually buy gold? Here's the honest answer. Gold isn't a bet, it's insurance. Most financial advisors who recommend it suggest keeping it to a modest slice of your overall portfolio, often cited in the range of 5 to 10%. Not as your main strategy, but as ballast against the stuff you can't predict. Currency shocks, systemic panic, a crisis nobody saw coming. If you're chasing quick gains, gold's recent swings show it can burn you just like anything else. But if you're trying to build a portfolio that doesn't fall apart the moment one thing goes wrong, a small, steady allocation to gold has done exactly the job it's supposed to do for centuries. Not the star of the show, the seatbelt. So, is gold the safest investment right now? It's not risk-free, and anyone telling you it only goes up hasn't looked at this year's chart. But as a hedge against inflation, currency risk, and pure chaos, gold has done what it's always done: hold value when trust in everything else gets shaky. The real question isn't gold or nothing. It's how much of a role it deserves in your portfolio. If you want the full breakdown of how to actually build a portfolio that can handle a year like this one, that's coming in the next video. Hit subscribe so you don't miss it. And let me know in the comments, do you already own any gold? Or is this year's chaos making you consider it for the first time?